Welcome to TradeNBI.com. This is John. This report is for the 19th of May. Well, the red leading, it was just a matter of waiting for a pivot. We didn't get a complete pivot lower of Magenta. That's more or less started today. But certainly the fail off of short-term buyers certainly created a collapse. And once we get to the 23%, which is a normal retrace value within previous days, pretty significant move. But once that 23% was broke, it just accelerated quickly. And it was actually pretty early on in the day. The sell came in and it just never changed, just kept going. So this was one of those where short covering that lifted things really was not sustainable from a buyer standpoint. There just was nobody there to lift it and fill in the bag. Of course, back towards that 38.50 level. We'll see if we actually get to it. I know it was short by 5 the last time, so we're still 10 off of it at this particular point. We'll see how that goes. And from a NASDAQ standpoint, looking identical. This is interesting too because it's important that, like on the NASDAQ, you see the magenta is still above yellow in this particular case. And also, if we go back to the S&P, it's also above on the S&P. So those can reverse pretty quick when we see them. So we'll just have to follow that as it goes. From a euro standpoint, gave back the majority to get it to that 23%. Same situation with the red leading. Still has some strength in it, though. Hasn't rolled over now like the S&P and NASDAQ did similarly at that particular stage. And from a gold standpoint, again, it's that battle between, is inflation going to continue to rise, which seems inevitable, but at the same time, is there a constriction that can develop within it now that they've bifurcated the markets? It kind of just really throws things for a loop. And ever since that whole Russia breakup, market-wise not being allowed on the trading desk and that from back over here, it created some turmoil, and then it exacerbated itself as we got into the point where it was completely separated. And we have relatively, two different gold markets. One's physical, one's paper. And from an oil standpoint, still over 105 per barrel, and anything over this 100 level is just a drain on the economies. Just sucking in. Of course, on a big down day like that, people flock to treasuries. That lowered the yield slightly, but still right between this 120, 112 range. I've always said that right around 115 was the target range we were looking at. It's back and forth in there. It's going to be a normal situation of the trade. Crypto, the Bitcoin's still around 28 here. Hasn't really been doing much. Again, there's not a lot of excitement, and once the credit tightened, you've lost a lot of the advantage of people using credit to purchase a lot of this stuff, and really has created some softness. ETH again has been good, a little pumps, but as soon as we get those sell signals and that, beautiful in their turnarounds, even with the buys, a little late day, but positive extremes. It's already filled those back, but that's also because the market's down again. I mean, coming off of that big trail off the other day to start the market already, we're down another 60 in pre-market. So capturing that short signal, it was pretty clean from the breakdown right up at the peak. Literally started early, and it was really closer to the 40.83 range, and here we are again at 38. So that's, again, this is just a representation of the markets fall 66% faster than they rise, and it gets pretty sped up. So what happened we had here was the rise from the previous day. It was already a pretty strong day, but we had created all these positive extremes from going way back. And if we go back to those, I can scroll back a little further here. And let's cancel that. Oops, what's it supposed to be? Clicking the wrong buttons, it happens. And see where I had the country. So here was the breakout move that as it started. So we had the positive extremes beginning all the way to the start of that. And then you could pick a series of them going through and just collect the start of each new one, even though that was a yellow right there, which still pretty darn close to the exact same thing. I considered the new wave there. So they created the 4035, 4017, and then 4K1. And then, of course, we had everything that was already below it. But as we ended up at the peak, we had a whole other set of them that were up at the top portion. So when the first sell signal came in here up at the peak, my expectation was, well, you'll fill the first level, taking you back towards this 50% range. Did that pretty quick, and then just kept going, and then all of a sudden we filled the top side at the 35 that left the lower ones, hit the 17, then all the way down to the 4003, and still couldn't catch any support. And it's just beautiful when you see this, because you're the white NBI leading. Every time the magenta pivots, in particular pivots below the 25, you get a nice downdraft within those. And amazing how when you had even these peaks with the red leading on those, couldn't even get to the 23%. And so those just become, kind of a given that you're going to come back to the zero. Sort of what we're seeing on the daily configuration as well. And pretty clean, straightforward as far as that goes. And just continuation. I mean, we had very late in the day, one little pop, built up again, created a secondary one, thought that was going to have a little bit more, but rolled over pretty fast. And then right as the post-market began, ended up with a nice little start to it, but again, once the sell hit, boom. And that's where we're at. Just a clean and I would think orderly meltdown, nothing outside the norm, and certainly consistent with what we're seeing from a broader economic configuration. So some of that credit tightening in reality is going to start to bear itself out. Now, before you get all hyperbaric about what's going on, again, much of what's going to happen as far as contraction in the economy, I think, is going to be diverse depending on the location. So it's not going to be uniform like 2008 stuff where everything just melted. This is going to be certainly areas that have gone too far too fast, and others that are where there's net migration that are going to probably fare okay. So in this particular case, your areas in Southwest are going to suffer because we've been seeing pretty big migration out of California now, but places in the Southeast and southern portion of the U.S. are probably going to fare okay because of the net migration and the demand. So I think that's going to be an interesting dichotomy, and I think that could bolster the market in certain areas. And so the gloom and doom crowd sometimes gets over exuberant, and they think that everything's going to zero, and it doesn't really happen that way because people are still living, still going to do their thing, and there's just going to be these are some shocks that have been arbitrarily placed, and when they're arbitrary and they're removed, the potential for a return back to stabilization is significant. At this particular point, we haven't seen any desire to change some of those arbitrary roadblocks that have created these problems, but enough pressure built and people may change their minds and put in some policies that are more conducive to growth. We'll see how that plays out, though. As always, trade well. We'll talk to you later. Look for me on Skip Chat.